Hey, what's up, my friend? So you can see, right, I had a haircut. And speaking of haircut, right, I want to give a shout out to Daniel, right? Why Daniel? Because I was eating a tea break or early dinner, right, after my haircut, right, at a hawker center somewhere in Marine Parade, in Singapore. Then I was eating my rice, right, economical rice. So for those of you who are from other country, right, in Singapore we have something called the economical rice, where you can order dishes like fish, vegetable, chicken on a plate of rice, and it's pretty economical. This is why it's called economical rice. For Chinese, you call it cai fan, vegetable rice, whatever. So after which, while I was eating, right, then there's this trader by the name of Daniel came by and said, "Hey, is this trading with Rayner?" And I'm eating my rice. Nom, 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 nom. Oh, yes. So yeah, so that's how we get to know each other, right? So Daniel is a full-time options trader, and I guess I'm really glad, I'm really honored to have people coming up, and say hi, right? I really appreciate it, and I'm really happy to make friends in this way because now through the power of internet we can actually breach, I'll say, boundaries, which was last time, uh making it difficult to connect with one another. So nowadays the boundaries is pretty much flattened by a lot, and yeah, I really enjoy meeting new traders from around the world, or even local traders, right? So Daniel, hello, right? So yeah, that's my little story about the haircut, the rice, and Daniel. Okay, so now back to this week's market analysis. I want to talk about the S&P 500, right? Because we had the massive sell down on Friday. So I want to talk about, how I'm looking to trade it, and what are things you should look out for. Then I'm going to talk about the dollar yen trade, which we spoke about last week, right? I want to share with you on how you can actually manage this trade, right? You should be somewhere maybe a little bit in profits, or maybe break even around there, right? And last but not least, right, we talk about the 30-year Treasury bond. And oh yeah, right, one last thing. I also want to talk about stop hunting, because this is an issue that is, I think, it's really something that traders keep talking about. So this is something that I want to talk about in this week's video as well. So all this and more in this week's market analysis. I'll see you there. Okay, so the market that broke down on Friday is actually none other than the S&P 500, right? So at this point in time, right, is usually where the financial news media is going to say stuff like the market is bad, sell off, blah blah blah, right? But honestly, right, you have to take financial news with a pinch of salt, right? Their interest is not to make you a profitable trader or an investor. Their interest is to gather more news, views, or hits, towards their website or television network. So the way to do that is to play on traders' fears or greed. These two, right? Because fear and greed is the more predominant emotions that we have as humans. So this is usually what happens, right? So you have to always take it with a pinch of salt, right? And if you ask me, more often than not, it's usually bad for your own trading or investment. Okay, so how do you then trade based on objectivity, right? Look at prices, right? The prices don't lie. So just look through the charts, right? Look at the weekly time frame and see where you are in the big picture of the S&P 500. Right? I'm sure you can agree with me that this trend over here on the S&P is overall still in an uptrend. Right? We have this long-term consolidation over here that occurred, I think, for about 2 years. Then it finally broke up, and then on Friday we had this sell down over here. So it's still too early to conclude that the markets is going to a downtrend, it's going to a long-term bear, recession, blah blah blah. Because if you ask me, for that to happen, this is the key area of support. This one, let me draw this better. Is this area of support is the one to be looking for, because if this breaks, then I'll shift my bias from bullish, right, long-term bullish, to bearish, right? So this is the key area of support I'm looking at. So now from a trading standpoint, right, if you look at this move over here, this shouldn't really catch you by surprise, because if you look back just few months or 1 or 2 years prior, you notice that this kind of move of this magnitude has actually happened a few times. And if you look at it, right, what happens afterwards when this kind of move happened, right? Let's look through, right? Recently we have one in June. We have this huge massive sell-off over here, then price traded lower, and then it reversed the losses and trade higher once again, right? You look further back, sometime in November, December 2015, we have this huge major sell-off, and then prices rebounded and then trade higher once again. Over here, July 2015, similar occurrence, sell-off, and then the market reversed, from this bounce and then reverse higher once again. So one thing to take note is that this kind of sell-off shouldn't come as a surprise to you if you're a trader. If you look at the charts, you know that this is actually a pretty common occurrence, right? Now the question is, where are you looking to trade this market, right? For me personally, I'm looking to get long the S&P, right? Because after all, we are still in a uptrend, right? A long-term uptrend. So one thing I want to share with you is this, is that the S&P 500, or rather, I would say most markets, is very prone to what they call a lack of a better term is called stop hunting, right? Where traders stops tends to get triggered and then the market goes back in the opposite direction, right? Let me share with you one example over here. This is an area of support, right? What does the textbook tell you? Put your stop loss below the area of support. So you put your stop loss below this low, below this low. Then what happened? The market comes in, clean up your stop, and then trades higher once again. And if you think it's only, towards the long side, not really, because if you look at it, right, on the short side, what happened? Put your stop loss above resistance, so stop loss goes above this high, the market cleans up your stops and sells down lower. So this is a very common occurrence, right? You can look back again, same thing over here. Stop loss below these lows, right? Get triggered and then the market rally. So needless to say, right, what I'm looking for in the coming maybe days or weeks ahead is that this is an area that I'll be looking to trade. Right, this lows over here. So don't try to go long and then just put your stop loss below this, and put your stop loss below this low, because it is very likely that your stops will get triggered. So instead, what I would rather prefer to look at is for the market to come down lower, right? Spike through below these lows and then trades higher. So this is where traders who put their stop loss below this low would have gotten triggered, right? So this is, I would say, is a much better way to get long, and then after which you can then put your stop loss below this low. Right, so this is what I would very much prefer, right? To see that other traders have been stopped out and then only I enter the trade. Okay, so this is the S&P 500, right? This is my take on it. I'm still bullish, and the area to be looking out for is this one over here. This is the key area I'll be looking out for. So that's it. Let's move on to another market. Let's talk about the dollar yen, shall we? So dollar yen is a market that we talked about last week, right? I mentioned that I'm looking to short this market. So for those of you who missed it, right, we just looked through daily time frame, dollar yen, what is the trend, right? I'm sure you can agree with me that the trend is towards the downside, right? You have a series of lower highs, lower highs, lower highs, lower highs, lower highs. So on top of it, right, why is this area significant? Why is this area significant? Because when you are trading with the trend, you don't just want to, enter because it's an uptrend or go short because it's in a downtrend. You want to be trading from an area of value, an area where, there is value to trade from. So for example, you go to the supermarket, you buy, say, groceries, oranges, right? You want to buy oranges where it is, at its value price. For example, $3 for $1. You're not going to buy oranges, selling for $3 for $20 because it is out of your area of value. So it's the same thing in trading, right? You want to be trading from an area of value. So a way that you can identify area of value is, using the moving average. For example, this one, you notice the dollar yen tend to respect the 50-period moving average. It tends to break out a little, then it comes back lower. Break out a little, then it comes back lower. Break out a little, comes back lower. Break out a little, then what happens? Chances are it could trade lower. And for those of you who use trend line, right, you can place trend line drawing down, right? Even support and resistance, right? I believe there was this is a level over here. If you notice, price bounce off. Support, breaks lower, previous support turns resistance, right? Price breaks out of resistance, come back, retest as previous resistance turns support. We have this slight bounce, and then market closes, trades lower, and then goes up again. Previous support, oh gosh, it's so messy, right? It's not okay, it's quite close to the support. Maybe it should be somewhere along here, right? Previous support, now turn resistance, right? So you have a few factors going for you: the trend, the false break of the 50-period moving average, as well as this the trend line which I've shared with you earlier. So this level is pretty much a key level to be watching for. So the setup came right on the 4-hour time frame. You see that pretty much this move over here is the retracement which you saw on the daily time frame. So I would guess, I want to say that the first clue that the market is telling you that the bulls are losing steam is when you look at the attempt by the bulls, the last attempt. Look at this move over here, right? Notice how weak this is. You have 1, 2, 3 bullish candles, right? But the strength of these bullish candles is pretty much weak, right? Because if you compare to the recent down move by the bears, right, it is much stronger compared to this one by the bulls. And if you look previously, right, this candles is very strong, right? Clearly the bulls are in control. This one is very strong as well. But when it comes to this portion, the bulls are getting weak, and the bears, notice the selling by the bears seems to be gaining control. So this is a sign that the bulls are getting weak, and a logical way to trade this particular setup is you can have a sell stop order below this low, or this one over here. It's pretty much up to you, and your stop loss will go above this high over here, right? We talk about the stop hunting concept, right? Traders put their stop loss above this high, will get triggered on this spike up over here, right? So depending where you place a sell stop, either here or here, you should be, I think, somewhere near break even at this point in time, right? Depending how you enter your trade. So now the question is, how are you going to manage this dollar yen trade? This is the question. So to answer this question, right, I would say, what type of trader are you, right? If you're a swing trader, right, then you're looking to just capture one single swing in the market. If you're, say, for example, a trend follower, you're looking to capture the entire trend, right? Trying to ride for as long as possible, right? So you have to ask yourself, which type of trader are you? So let's talk about the first type of trader first, a swing trader. So swing trader, typically you're just trying to capture one swing in the market. So for example, what is one swing? So the market retraces here, you go short and the market trades lower, you capture this one swing in the market. So this is a swing trader, what they try to achieve. So from a swing trader point of view, right, looking at the markets right now, you want to ask yourself, where is the likelihood that you anticipate buyers coming into the picture? All right, let me repeat that question once more. Where is a likely place on this chart where buyers will come in to push price higher? And where do you think sellers will look to take their profits? Right? Chances are buyers will look to come in around here, right? Because this is an area of support. All right, and those who are short this market, chances are they will like to book profits ahead of this area. So if you ask me, if you're a swing trader, this is an area that you could look to exit your trade, to take one swing in the market. Okay? What about trend follower? Right, so trend follower is this can be a really huge topic in itself, because another question that you can ask yourself is, what type of trends are you trying to capture? Is it a long-term trend, a short-term trend, a medium-term trend? So there are different types of trend in the market. Right, so let's simplify this, right? Let's assume that you just want to capture the trend that you're currently seeing on this dollar yen chart. And let's say, for example, is this trend line over here. Right, we can say that, for example, if this trend line holds, then we can assume that the trend is intact. So what you can do is that you can trail a stop loss as long as this particular trend line holds up itself. So this is one way to ride the trend. Alternatively, there are traders who could use, structure of the markets. For example, this is the previous swing high, right? The most obvious and previous swing high. You can wait until for the market to break and close above it. But in this scenario, it may not be too practical because your initial stop loss is over here. So chances are you have to reference from this particular swing high instead. So you can see that you want to trail your stop loss to ride the trend. There are really a few ways to go about it. There is no right or wrong per se. So ultimately, you have to find the technique that actually makes the most sense to you. But I hope I actually give you some insights and idea on how you can actually go about managing this trade, right? Like I've said, right, the weekly videos I share with you is not a signal service, rather is to help you think deeper about trading, so you can actually find a trading style that actually resonates with you, right? So this is what these weekly videos are for. And last but not least, I want to share with you is the 30-year Treasury bond. Okay, where you are here. Okay, so if you look at the weekly time frame, right, 30-year is still in an uptrend, right? You notice that the 20 and 50 period moving average, this is the 20, this is the 50, right? They are currently acting as dynamic support. So this is an area where traders who are bullish will look to get long. So price is now coming back into this area right now. So looking at the daily time frame, right, you can actually notice that there is a key level that you should be paying attention to. Is this over here? Why this? Right, I'll say this is a key level because notice, right, over here we have resistance, right? Price tested the resistance a few times. Then it break out of resistance, and it comes back. Previous resistance becomes what? Support, right? Previous resistance becomes support, right? So price then trades higher, and right now it pulls back. Then we have this long period of consolidation, and right now it broke out of this consolidation pattern, and this is a level that is likely to be tested. So this is a level that you should be paying attention to. So now you have a few things in your favor. Number one, okay, I sound like a nanny, I sound like very draggy, but I need to drill all these concepts into your head, right? Trend, you're trading along with the long-term trend because you saw on a weekly time frame, it's an uptrend. Number two, this is an area of support, right? Area of support. So you're trading from an area of value. Remember, you want to buy oranges at $3 for $1. You don't want to pay oranges at $3 for $20. All right? Because honestly, a $20 orange and a $1 orange is going to taste the same. Maybe one is slightly more sour, but it's just add some sugar yourself, but it's going to taste the same. So you want to be paying value, right? Maybe you're a multi-millionaire, then that's a different story. But for normal retail traders like us, right, you want to be trading from an area of value. Okay? So this is an area of value. And the third thing you need is your entry trigger. So this again is an entire topic in itself, right? You can trade pin bars, candlestick patterns, structure break on a lower time frame. I mean, there's really a lot of different trigger that you can use, right? But I think if you watch my previous videos, you know there are a few entry trigger that I've spoke of before. So this is the third thing you want to look for, trigger. Fourth thing you want to look for is your exit, right? At which point on this chart will your trading setup be invalidated? At which point? If you ask me, right, the moment if you enter the trade and if support does break, say for example price comes all the way to down here, chances are your trading signal is invalidated. And last but not least, fifth is, you know, your risk, right? You don't go and bet the farm on this trade. You know, all the factors can line up in your favor, right? But it does not mean that, you know, you mortgage your house, you know, sell everything you have, right? And just wear one, you know, singlet and slippers and put everything on this trade. Because honestly, trading, we are dealing with probabilities, right? Never certainty, right? So this is why your risk has always have to be kept small, right? Typically 1% is a very good start for new traders, right? Even seasoned traders, they don't risk anything more than 1%, right? So this is all the 5 things that you need to watch out for. Okay, so when you have all this going for you, right, it doesn't matter what is the outcome of the trade, right? To me, it's a good trade, whether it's a winner or loser, if you actually follow these 5 criteria, right? Especially your risk. Okay, so yeah, the 30-year Treasury bond this is an area to be looking out for, so do keep a lookout for it. So yep, that's all I have for you in this week's market analysis. And oh yeah, just one last thing, right? Remember the S&P we're talking about? Stop hunting. Same thing, my friend. Look at this, right? This is the lows. Where would traders put their stop loss, right? Textbook would say, put your stop loss below the low of support. So it's this over here, and then pop, triggered, right? Same thing, right? Again, once more. Over here, previous resistance, turn support. Where do you put your stop loss? The textbook says to put below the lows of support. Here. Triggered, right? Same thing. So again, you look at this level, chances are this area, you know, traders are going to put their stop loss below this low over here. So if you ask me, look for this, right? It's much better. I really prefer setups that actually, you know, trades below the low before, you know, trading higher, right? Where the stops get triggered, right? Compared to a setup that looks like this, where it doesn't trigger the low and then trades higher. Usually I just give this a miss, right? I really like to see the lows get triggered, the stops get triggered. Okay, so yeah, I guess run a little bit slightly longer this week, so I hope you get my point. So that's it, right? That's all I have for you in this week's market analysis. I hope you find it useful. If there's anything, right, don't hesitate to let me know in the comment section below. Right, so feel free to hit the subscribe button below and you'll always be updated. Talk to you soon.